Hey everyone, it's Larry from WSTrades.com. I want to do an update on one of the indicators that I built and shared a long time ago. This has been on the website, but I've been with all of my indicators, I'll kind of go through them. And if I think of something new to add, I'll add it and then update it on the website. So you might get alerts that if you downloaded this, that there's an update available so you can update it. So I did some updates, wanted to go over this. And the last time I did a video on this, long time ago, I was kind of buzzing through it because I was going over several different indicators that I had added to the website. So just want to kind of take a few minutes to show you guys this indicator and how it works and the things that I added to it. And this is the WST BSP, which stands for buy sell pressure volume indicator. So it's a much better way to actually visualize what the volume is on your candles. So first, I'm going to go over to the website, show you how to get it for free, and that is WSTrades.com. You come to the top, go down, ThinkorSwim indicators, go down to almost the bottom, and that's the WST BSP. Click on that, and come down. I'm going to read this real quick. This is the description of it on the website. It says, this lower indicator is a quick visual way to see if buyers or sellers are in control of a security. Each bar shows red, which is selling pressure, and green, which is buying pressure, as well as the percentage of buying or selling pressure on the current bar and the trend of pressure, if any, in labels on the left side. There's also a blue horizontal line that is the average volume for the period. The default period is 21, but you can set it to whatever range that fits your trading style. And I'll show you guys how to do the customizations for your style in a minute too. It says I've also added, and this is the new stuff. So if you downloaded it before and you got a notification for the update, then this is what was added. I also added points under each bar and a label to show when a bar's range isn't consistent with the volume needed to cause the range of that bar, which is Wyckoff method. It will either be magenta, which is above average volume for the range of the bar, or white for below average volume for the bar. You can adjust the percentage that you consider highly unusual. Stock setting is 40% above or below average range. So you'll just click on this download link. It'll take you to the ThinkorSwim download page. And if you don't know how to import things to ThinkorSwim, we have videos on that, so you can just search it out and just upload it to your platform. I'll head over to the platform and go over more of it there. So what you see in this indicator, I'm going to zoom in, get the bars a little bit bigger. You'll see that there's the green, which is basically the total volume, and then or it visualizes as the buying pressure, and then the red, which is the selling pressure. So you know who's actually in control during these candles. So if you have like stock TD volume on your chart, it's just, I believe it's like a bluish color, and it's just showing you the volume for that bar. Right now I'm on the 1 hour, so it's basically each bar is 1 hour. But if you're on the daily or whatever, this is just the volume for each bar, and it doesn't tell you much besides how much volume there was. And with this indicator, it shows you who was actually in control. Did buyers step in? Did sellers crush something? But it's still with stock volume, you can also change it from just that stock bluish color to it'll actually mimic the color of the candle. So like this one, volume bar would be red, this one would be green. And again, it doesn't really tell you a whole lot of what was actually happening. And if you know how candles are formed and you can do it quickly in your head, then you don't really need that. But this is just a very quick visual way you look at it. You're like, okay, way more green than red. Buyers were in control. And how that works is I'll show you kind of what the difference would be. So we'll zoom in on this candle. Where did it go? Like this one right here. So this would have just been a red volume bar on a stock volume indicator. But if you go down here and see what the volume was doing, the buyers actually stepped in hard into this, and there's a lot more buying pressure than there was selling pressure. And, how does that make sense? This was a red candle, it closed lower. So if you know how a candle was formed, then you know that the open was right here. So open's here, and then at some point with these wicks, the price was in between these wicks. So you have open and close, but some point this thing, the price had came down and touched here. But where you get this green from is the buyer stepped in and shot this thing back up to close, just slightly below what it had opened up at. So that's where the buying pressure would come in, and you'll see that quite a bit. So you just have to kind of look at it, and like this one, completely red, you know almost 100% red on this one, because like I said, if you know how candles are formed, opens here, at some point pressure or a buyer stepped in, but then just got absolutely crushed, and the price ended up closing lower than it had opened. So like I said, it's just a real quick visual way. And one of my biggest things on this isn't so much, well, it's for sure the buy sell pressure, but it's the average volume. I always want to know, was this a spike in volume? Where did this move come from? Was there a spike in volume? Was there more, people stepping into the market? Is this move real? So just being able to quickly see on a chart, is this thing above an average volume that you set, is huge for me. And the newer stuff that I had added are these little dots. You'll see here's a white one. Here is a magenta one. And let me zoom in because there's actually one on the closed or the last bar. So this bar right here got a magenta dot, which is the above average volume for this range. And what that means is it took way more volume than it normally does on average to move this thing uh, in this range. In, the size of the candle, or with the wicks included, it took way more volume than it typically does. So it's just kind of a heads up, and that's where the Wyckoff method comes in. And he's got, I'm not going to go over all of it. If you guys want a video on just Wyckoff theory, if you're interested in it, then let me know in the comments. But basically he had three main laws. One is the law of supply and demand, and that's what determines the price, which that's simple, that's obvious. The law of cause and effect. So Wyckoff's third law, which is what these dots and the labels are based around, is the law of effort. So it's basically saying in order to have price move in a big way, you need to also have that much push in volume. So if you see an abnormal move higher, then you should also see an abnormal move higher in volume. So, if you see something, and that's what these labels are for, and these dots, is you can see on SU, we had a above average volume for the range move into this, and I'm actually long SU because of this. We see this consolidation here, and right now you saw this big spike in volume to close. And what that would mean, if you're looking at, or if you subscribe to Wyckoff's theories, is basically if you see a restricted range but a big spike in volume, then that means the insiders are offloading or either loading up. So there's a very good book called what is it? Volume price analysis. It's all based off of Wyckoff's laws. Great book. And basically what Wyckoff is talking about is he's trying to get in the minds of big money, of the banks, of the market makers, and figure out what they're doing and trade with them, which is, you don't see a lot of people trading like that. They're, especially nowadays, you see a lot of FOMO and, this thing's going up, so I'm going to grab some. It's not working out a lot for, most people. So Wyckoff, what he's saying is, in order, if you can identify a candle where, there was way too much volume for this big of a move, then that could indicate that the market makers are kind of testing the waters, seeing if they can start selling off, or buying up, whatever, if you're in a downtrend or uptrend, or if a big move with small volume could be, the makers are kind of out of it and it's just retail kind of buying in. But a basically the market makers are manipulating the markets for their own gain. So right now, looking at this SU chart, uh, I would say that it looks like, we had this big sell off from, where are we at, about 34 bucks, sold off, and now you see all this consolidation. You see some big spikes in volume. So according to Wyckoff law, it would be that the makers are loading up right now, and they don't want to blast it off quite yet because they still want to have a cheap price they're getting in at. So what they're doing is just loading up all through this consolidation and waiting before they have, that's another thing in Wyckoff's law. And again, didn't want to get that deep into it, but then they're going to have the markup, and then they'll start, dragging people in that are feeling the FOMO and, oh man, this thing's making new highs and everything. But big money wants to keep this thing running sideways while they're loading up. So that's, something you could see in a candle like this would be, price isn't moving very much, but there's big spikes in volume. It's above the average volume. You can see it's above the blue line. So anyway, sorry, I didn't want to get that deep into the Wyckoff stuff on this one, but that is what part of this indicator is. I'm going to show you real quick how to, how to adjust the settings to, whatever you want. So you come over to the BSP, hit this little cog, and these are the different settings you can do. So the volume length, so this would be for your average, this blue line. If you wanted to make it, longer, shorter, or whatever, if you wanted, maybe if you're on the daily chart and you only wanted the past 5 days average, if you're, kind of quick swing trading or something, you could do that. And these ones, this is above average volume for the range, and this is the below average volume for the range, and it's in, you got to think of this is like percentage. So anything above 1 is going to be above the volume. So that's, why the 0.4 is 40% higher, and it takes 40% to get to 1 on the, or take, 0.4 to get to 1. So that would be the 40% on the below average volume. So, if you want to do 5, which would be 50% move, you can just click on these or just type it in, whatever you want. So anyways, that is the indicator. That's how you do the custom settings on it. If you guys have any questions, you can leave it in the comments. Head over to the website, go to the go back, show you how you can contact us there as well. Up here, and just right next to the disclaimer, just hit the contact thing. It has all of our info. You can email us, hit us up on this. You can actually leave voice messages on the podcasting app if you guys want us to answer a question in the podcast. So anyways, lots of ways to get a hold of us. Appreciate you guys watching this video, and have a good day.